Ladies and gentlemen, good day, and welcome to the Sunteck Realty Earnings Conference Call for Q1 FY’26. We have with us today Mr. Kamal Khetan, the Chairman and Managing Director of the company, Mr. Prashant Chaubey, the Chief Financial Officer, and Mr. Abhishek Shukla, the Vice President of Strategy and Investor Relations. Please note, this call will be for 30 minutes, and for the duration of the conference call, all participant lines will be in the listen-only mode. This conference call is being recorded, and the transcript for the same may be put up on the website of the company. After the management's discussion, there will be an opportunity for you to ask questions. There will be a Q&A session, and we request to restrict questions to 2 per participant. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Before I hand the conference over to the management, I would like to remind you that certain statements made during the course of this call may not be based on historical information or facts and may be forward-looking statements, including those related to business statements, plans, and strategies of the company, its future financial condition, and growth prospects. These forward-looking statements are based on expectations and projections and may involve a number of risks and uncertainties and other factors that could cause actual results, opportunities, and growth potential to differ materially from those suggested by such statements. I would like to turn the conference over to Mr. Khetan, the Chairman and Managing Director of the company. Thank you, and over to you, sir.
A very good afternoon to everyone, and thank you for joining us today. We are off to a strong start with several positive developments that sets the tone for the year ahead. I would like to highlight a few key achievements that showcases our progress and momentum. We achieved a significant milestone with the highest ever first quarter pre-sales bookings of rupees 657 crores in Q1 of FY’26, representing a year-on-year growth of 31% as against 502 crores in Q1 of FY’25. Building on our strong performance, we reaffirm our guidance of achieving similar or a better growth for the full year of FY’26. As the uber luxury and premium luxury segment continues to drive a larger share of our pre-sales, we anticipate further margin expansion contributing to our overall profitability. On the business development front, I am pleased to share the addition of 2.5 acres of redevelopment project at Andheri, Mumbai, near Western Express Highway, with gross development value of rupees 11 billion. With this project and more to be added in coming quarters, we are confident of taking our GDV to more than rupees 500 billion from the current GDV of rupees 400 billion. We are accelerating our BD activity and have already invested more than rupees 3 billion in current quarter compared to rupees 1.8 billion for the full year FY’25. We continue to scale our operations by aggressively investing to drive the growth, but at the same time, our prudent cash flow management allows our balance sheet to remain strong with negligible net debt to equity ratio of 0.02x. As we are increasing our GDV value exponentially, we are gearing up for the new launches, and we have set a target to launch new projects worth 110 billion GDV in the coming 3 quarters of the financial year FY’26. I repeat this, we have set a target to launch new projects worth rupees 110 billion GDV value in the coming 3 quarters of the financial year FY’26. Our strong financial foundation enables us to pursue strategic initiative and be more agile and responsive to changing market conditions, ultimately driving long-term value creation for the company. I shall now hand over the call to Prashant Chaubey to take you through the financial performance of Q1 FY'26.
Thank you, sir. Good afternoon, everyone. I trust you have had the opportunity to go through the latest results and the investor presentation, which are published on our company website and the stock exchanges. I would like to take this opportunity to share a brief update on financial and operational performance of Q1 FY'26. The key details are, we sold rupees 657 crores worth of area in Q1 of FY'26, which is a 31% growth over Q1 of FY'25. Collections for Q1 FY'26 stood at rupees 351 crores as compared to rupees 342 crores in Q1 of FY'25. The strong collections has resulted in a net operating cash flow surplus of rupees 108 crores in Q1 of FY'26. On the P&L front, operating revenue stood at rupees 188 crores for Q1 of FY'26. EBITDA stood strong at rupees 48 crores in Q1 of FY'26, representing 52% growth over Q1 of FY'25 EBITDA of rupees 31 crores. EBITDA margin stood at 25%, up 15% on year-on-year basis. We reported net profit of rupees 33 crores, which is a 47% growth over Q1 of FY'25, and net profit margin stood at 18%. Our net debt to equity stood at 0.02x, and Fitch India Ratings has affirmed long-term credit rating of AA stable to us. With this, we open the floor for questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Biplab Debbarma from Antique Stock Broking. Please go ahead. Biplab, if you can please unmute your line and ask your question. Since there is no response, we'll move on to the next question, which is from the line of Saurabh Gilda from JM Financial. Please go ahead. We take the next question from the line of Abhishek Lodhia from Motilal Oswal Financial Services Limited. Please go ahead.
Yeah, good afternoon. Am I audible?
Yeah. Very much.
Yeah. Good afternoon, sir. So, my question is about collections. Collections somehow looks little weaker. Is there any reason to it, or what? How should one look at the collections?
Hi, Abhishek, Prashant this side. So if you look at the collections, both on a Q-on-Q basis and on a year-on-year basis, our collections have gone up. And in the coming quarters, you will see these collections improving even further. As you are witnessing, our pre-sales is coming from newly launched projects. So as the construction moves ahead, you will see collections moving, collection momentum gaining further strength going forward.
Okay, sir. Thank you.
Thank you. We take the next question from the line of Vasudev from Nuvama Wealth Management Limited. Please go ahead. So till then, we'll move on to the next question from the line of Abhinav Sinha from Jefferies. Please go ahead.
Yeah. Okay.
Okay, so let me just go ahead with my questions.
Please. Sorry for this, everybody.
Yeah, no worries, sir. So good to see the strong numbers. Just couple of things. One is on the new launch project target that you have said of 110 billion in the next 9 months. So can you detail what are these projects?
So, yeah, Abhinav. So this is the launches from ODC 5th Avenue, Sunteck City, which is close to more than 1,500 crore. And then Bandra Bandstand, which is more than 1,000 crore. Andheri, this Western Express Highway, which is the new acquisitions, which is again 1100 crore. And Mira Road, we are looking to launch one more new tower, which is again 1000 crore. Vasai, Sunteck Beach Residences, which is again two more new towers, because we are from the old inventories, we are almost exhausting most of the inventory, so two more new towers there, close to 500-600 crores there. Naigaon Sunteck World, the one more new phase. From there, we are looking to again garner another 500 crores launch, new launch of rupees GDV value of 500 crore. So total GDV value from this launch pipeline, including on APNC Road, should be close to 11,000 crore. What we look at this 3 quarters.
Okay. And how much of this you think is, say, 2Q versus second half of the year? Should we build in something right now?
So Abhinav, we all know that we are in the world of uncertainty in the case of approvals. When it comes, it is not in the company's hand most of the time. So, but we want to, that's why give targets for the full year. And we are confident that we will be able to launch this kind of a GDV value for this financial year of FY'26.
Sure. The second question is on the business development side, where you spent close to 3 billion this quarter. So how much of this is for Andheri, if you can guide us, and what is say on the horizon from this money?
So I would say Andheri would be very negligible, or in fact it is for all most of the things. It's new horizon, or maybe in one or two existing ones to increase the size of it.
Okay. And so this 500 billion GDV target, this we should achieve by March or maybe sometime next year?
We are talking about FY'26, March.
FY'26. Okay.
FY'26.
Great to see the strong sort of outlook here. Thanks.
Thanks, Abhinav. Thanks.
Thank you. We take the next question from the line of Saurabh Gilda from JM Financial. Please go ahead.
Yeah. Hi, everyone. Am I audible?
Yeah, Saurabh. Yeah, you're audible now.
Yeah. Hi. Congrats on the good set of numbers. Just wanted to get your outlook on the APNC project. I think it has been doing very well since the launch, and in this quarter also, I think that has driven the luxury sales. So how do you see the trajectory in FY'26?
So we are, if you see, the sales are coming from both luxury projects, BKC and BKC and APNC as well. And we are looking, obviously, that's why, to launch all our very premium end segments, including Bandstand, Bandra West, and that's why even the western suburbs are also driving good sales we are seeing. So that's why ODC and Andheri. So that's how we are looking, and this will continue in FY'26 and FY'27. So we are more focused on now uber luxury and premium luxury.
Okay. Thanks. And just taking the collection part again, is there any collection guidance that one can look at this year?
So collection guidance, giving guidance of collection would be very hard, but we can say that we will be definitely doing much higher than what we have done collections last year, because new sales which are happening is from the new launches. So once the construction of this project starts, obviously the collections will you will see the exponential growth in the collection accordingly, for sure. But it will be substantially more than what we have collected last year, I can say. So we are talking about pre-sales growth of more than 30%, where we can say a year also there can be a similar or something. There will be a substantial growth. I can say some similar growth we can look at the collections also.
So similar as the sales growth.
Not exactly, I would say, because I am just understanding. We can at least say 0.9% of that, because see, you have to understand what we are doing is the new sales, which are pre-sales of the new launches. So new launches, the construction starts and it picks up, then the collections will pick up. So that's how it is. So, but I can say it will be substantial more than the last year. Collection guidance will be very difficult for us to give it right now.
Okay. Okay, sir. Fine. That's helpful. Thanks so much.
Thank you.
Thank you. We take the next question from the line of Shreyans Mehta from Aquarius. Please go ahead.
Yeah, sir. Thanks for the opportunity. So first on any updates on our Dubai project, when can we expect that to come on stream? And secondly, as far as our commercial asset of Avenue is concerned, will the resi and commercial both come together?
Yeah. So when it comes to Dubai project, I have maintained, in fact, even in my last call, that Dubai launch we are looking to be launching it closer to either Q4 of FY'26 or Q1 of FY'27. That's what we are targeting, and we continue to maintain that. And when it comes to your commercial launch, because our same resi launch and ODC launch commercial, both are same Fifth Avenue, and both are related to this environment clearance approval. Once we get the approval for the resi, simultaneously we are expecting the approval for the commercial to also come.
Got it. And sir, one last, if I can, in terms of our new GDV which we are targeting, will it be on our asset light model or, will we go for some land acquisition? How should one look at it?
So it will be a combination of, I would say, all three. All three, when I say in asset light, it will be redevelopment as well as JVs. And when it comes to asset heavy, we have been doing, so if you see that this quarter we have invested almost 300 crore in just one quarter for new acquisitions. And if you see vis-a-vis 180 crore which was invested in the last full financial year of FY'25. So we are very clear that we want to go aggressively. At the same time, we also want to launch this GDV aggressively.
Got it. That's it from my side. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. We take the next question from the line of Anuj Upadhyay from Investec. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Sir, I do understand it's difficult for you to quote a number on the collection growth for the year, but at least if you get kind of a sense which are the projects from where we can expect the collection to be higher, relative basis, that would be helpful. Who would be the major contributor in terms of the collection?
So obviously, major contribution, whatever we have already launched and the constructions have already started and incremental sales happening in those like ODC, 4th Avenue, which is we have already received the occupation certificate. There we are seeing a large collections coming up. Mira Road, which is launched last year, and we have launched 3 towers. And the construction is going at the full swing there. There we'll see a huge collection. Vasai, where we have sold very heavily. And there are 6 towers which are under construction. There you will see a huge collection. All this will give you numbers which is higher than the current FY'25 number, which is much higher. So if I'm saying, I want to very clarify that if our pre-sales grows by 30-35%, we might not grow collection by 30-35%, but we can decently look at anything closer to 20% or 20 around that area. So that's how we are looking at. Because more sales, pre-sales, if you see, are coming from the new launches. So the new launches, obviously, next year you will see that effect of those coming. So incrementally, you might see next year maybe we will be in line with the pre-sales growth. Our collection growth, or maybe more than that.
Oh, fair point, sir. This is very helpful. Thanks for this.
Thank you.
Thank you. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and 1. Ladies and gentlemen, if you wish to ask a question, please press star and 1. Ladies and gentlemen, we take that as the last question. and I now hand the conference over to the management for their closing comments.
Thank you all for taking the time out of your busy schedule to join us today for the call. In case if any of your queries have been left unanswered, please feel free to reach out to us. We truly value your continued support and look forward to strengthen this relationship. Thank you.
Thank you. On behalf of Sunteck Realty, that concludes this conference. Thank you for joining us, and you may now disconnect your line.